The market is still rippling, earnings continue to surprise, and we've got a packed lineup from Fed to gold versus Bitcoin to some big names reporting this week. Let's get right into it. Welcome back to Navellier Market Buzz. So, Dad, the market keeps surging and the Santa Claus rally is strong, with sales up 8.2%, earnings up 16.5%, and a 9.6% surprise rate. Can things get even better?
Well, based on positive analyst revisions and guidance from companies, yes. So just for the record, that was the strongest sales in 3 years, the strongest earnings in 4 years, the biggest surprises in 4 years. But the companies have guided higher, and analysts are revising their estimates higher. That's why we're rallying right now, because it's kind of a quiet time of year, but the analysts got caught behind, and they have to start revising their estimates higher, and that's creating buying pressure underneath the stocks. Plus, we had that January effect the days before Thanksgiving, early January effect, and that means we're going to get a real January effect. And so normally we meander higher in December. The last 10 days of December are actually the strongest. I believe you're going to be showing a bespoke chart that illustrates that historically. But yeah, I'm pleasantly surprised, because often we get profit taking in early December, and we're off to a very strong start this month.
And let's just clear something up right now. No one should be selling.
No, unless you have to pay taxes or want to gift. A lot of people gift. People my age are supposed to gift to you, But no, it's lock and load time. If they do want to sell, I would recommend, because they need cash or whatever, I would recommend maybe the first week of February, because usually we get some consolidation then, but we'll have another big earnings surge to drive the stocks higher. And that's really what's going on.
We use your stock grader and 8-factor model for basically every one of these videos, and you just did a back test. Can you talk a little bit about that?
We do a back test of stock grader and the 8-factor fundamental model at the end of each quarterly earnings season. So end of May, end of August, we just did one end of November. And the last couple of quarters, the results have surprised me, because the market isn't broadening out, it's getting more narrow. So the quantitative grade on stock grader, we can buy in the top 10%. That's essentially the A's and the A pluses. Previous quarter was top 25. In the 8-factor fundamental model, we can only buy the top 10%. Previous quarter was the top 15. So we've got more narrow. What also showed up in the back tests is some of the F stocks, which are normally poor, did well because of short covering rallies. So a short covering rally is not a sustainable rally. When those kind of stocks rally, then the stocks will have to consolidate. So I think you'll see some churning moving ahead, and it's all based on analyst estimates. And if the analysts start to continue to revise estimates higher, those stocks will be rewarded. Otherwise, a lot of stocks will be backing and filling. So it's still a very narrow market. It's still a very AI and gold-driven market. There are exceptions, like Eli Lilly broke out, But the big are getting bigger, and we got to own the creme de la creme.
I'm glad you mentioned gold, and we've been talking about gold stocks for quite a bit. Right now, year to date, it's 59% up, while Bitcoin is down about 3%. So is gold becoming the preferred currency?
Well, it is for the central banks. The central banks are buying gold to give them more credibility, because most central banks don't have credibility now. A good example is the Bank of Japan is now struggling because the new prime minister is going to spend a lot of money, and it's going to basically neuter the Bank of Japan. So if they buy more gold, they'll have more credibility. Same thing with the Bank of England. Kirsteimer basically chased some of the wealthy out of Britain with tax increases, and now they don't have enough money for their budget, so they're raising taxes on the middle class, and they're even going to have a mileage tax in Britain. It doesn't kick in, I think, till 2028 or 27, but the bottom line is you'll be taxed over how many miles you drive on the highway. So, there's a thing called bond vigilantes out there, and if the bond vigilantes think that the government is mismanaged and won't be able to pay their debt, they do punish those government bonds. So these governments are held hostage to these people right now. So we'll see what happens. But the U.S. is in such better shape than everybody else because we're growing when everybody's stagnant. China's going to have to devalue its currency. Their rates are below Japan. And although we'll be lowering rates, we're going to lower rates slower than everybody else. And so I'm expecting the dollar to get strong and the U.S. to be an oasis. The other thing is the U.S. is demographically stronger. We're younger than a lot of these other countries in Asia, Northern Europe, and we are still creating households. And also we do assimilate our immigrants. Of course, President Trump wants immigrants to have green cards and all that stuff and work permits. But that's really the only change. So I'm not worried at all, but everybody else is, and that's why gold's doing so well. Gold buying was up 41% in January, 25% in February, and it's been strong all year long. And you can even buy gold at Costco now. Physical gold has turned out to be a great investment. And you got to decide, you want to lose 3% on Bitcoin or do you want to make 59% on gold? To me, it's pretty simple. So I think a lot of the crypto people will naturally follow the central bank buying pressure and gravitate to gold.
Now, I know that a lot of people watch Joe Rogan's podcast, but recently the founder of Nvidia was just on the show. What stood out to you from that interview?
Well, I love Jensen, the founder of Nvidia. I guess you could say I have a man crush on him. I think on Wall Street you have to bet on some of these billionaires. So I bet on Jensen. I'm gross overweight in Nvidia stock. I've also bet on Alex Karp, who's Palantir Technology CEO. And I just think when you listen to Jensen talk, he is very thorough, very innovative, very honest. And he deserves everything he's gotten because he created chips that no one understood why they have to have these graphic processing units. And it was funny on Joe Rogan, he announced when he upgraded the chips, these new designs, and no one understood what he was doing and actually hit the stock for a while. Even I got out. We made over 1,000% Nvidia a long time ago and we got out, but we've been in it and we're now well up over 4,000%. And I'm very comfortable and confident Nvidia's dominance will continue even as they get into quantum computing because they have a quantum computing simulator. They had a quantum computing contest. But he's a very thoughtful, very great CEO. There was also, at the start of the interview, there was some insight into when he met with the Trump administration. And Howard Lutnick, our Commerce Secretary, made it clear that they felt that Nvidia was a treasure of America. And anything he wants, just Howard gave him his card. He says, you call me and I'll get in touch with the president for you. And so far, his relations with the Trump administration have been very good. Now, Jensen, of course, wants to sell chips in China. He thinks China's still going to dominate AI longer term. And obviously, he's going to try to get permission to sell some type of chip in China when President Trump allows it. The Biden administration had made him redesign the chips for China, basically slow down the bus, the transfer rate of data. So there's a lot of potential expansion in Nvidia because their forecasted sales and earnings don't include China sales. And when those China sales get approved, they'll be doing pretty good.
Now, I know that there's been some flirting on whether or not the Fed is going to cut on December 10th, but what is the latest insight regarding that?
Well, we had an ADP payroll report, and it showed that we lost jobs in November, but October was revised up. So it was kind of a wash, but the bottom line, we lost jobs. Now there's new claims from unemployment coming out. They're still very, very low. So it's still a very stagnant job market, and the Fed will have to react to that. And I think the other reason the Fed needs to cut rates other than the employment data is the cause of our inflation was called owner's equivalent rent, shelter costs. We've had lots of evidence that's gotten much softer. And so we may be teetering on deflation. We obviously have very low energy prices. And so it's going to be very interesting. I think The Fed is behind, and I think they need to not only cut on December 10th, they need to continue to cut. We should be getting guidance from the Fed. They usually have a dot plot. I believe it's due on December 10th, and then we'll see what the rest of the committee says. But the big news, of course, for the Fed is that President Trump has picked the Federal Reserve Chairman. He will not be announcing it until January because it's a big deal, that announcement. And he doesn't want to announce it in the holidays because no one will be paying attention. But start the new year, he's going to announce it. The new pick has to get congressional approval. And we all think it's Kevin Hassert because it was just reported that the Trump administration is considering Scott Bessent to take over the Council of Economic Advisors that Kevin Hassert that's his current job. So Scott Bessent will have two jobs, Treasury Secretary and Council of Economic Advisors. I think people have to realize there's a very good team behind President Trump. I love not only Kevin Hassett, who's a happy, positive person. Howard Lutnick is a cheerleader for America, as are most Commerce secretaries, but Howard's more gregarious and outgoing. And then Scott Bessett's amazing. He fixed everything Janet Yellen screwed up. And we've showed charts that if you invested in the iShares 20-plus year Treasury ETF, you lost 43% in the past 5 years because the long end of the Treasury curve was oscillating and causing losses for people. And he fixed that. And the yield curve went from inverted to normal. So there's a very good team behind President Trump. And in Scott Bessent, we trust. In Kevin Hassett, I trust. And again, Howard Lutnick is a very good cheerleader.
There's still a couple of earnings ahead. Let's talk about Toll Brothers. Is the luxury housing boom still alive?
Not really. Toll Brothers is better than most home builders because they sell to retirement communities and there's more cash sales. Okay. And so they're in better shape than some of the other home builders that are dependent upon financing. So here's what's supposed to happen with Toll Brothers. Their sales are forecasted to decline 0.5%. Their earnings are supposed to be pretty flat. The analyst community has been held pretty steady with their estimates. And Toll Brothers has surprised in the last couple of quarters, although they missed 3 quarters ago. But this is the best of a bad sector. So I would hope that Toll Brothers would continue to surprise and provide some positive guidance because they really need that in the housing industry. It's really pretty dire out there for outside of luxury homes that the Toll Brothers builds.
Now for AutoZone, with people keeping cars longer, do they crush expectations again?
AutoZone used to have a wonderful earnings surprise history, but unfortunately they've missed the past 4 quarters. So that's gone. And but their sales are supposed to be up 8.5%. Earnings should be up slightly. But analysts are trimming their estimates, and that's not a good sign. So I've lost some confidence in AutoZone. In the past, they also used to buy a lot of their stock back. And I think they were manufacturing a lot of their earnings surprises with those stock buybacks. So this is still a great company. I wish them well. But because the analysts have trimmed the estimates and it's had a poor earnings surprise history, I don't have a lot of faith in it right now.
And for Adobe, can they prove they're still the king in the AI-powered creative world?
Yeah, they are. This is a monopoly, and I like monopolies. Adobe is a stock that's beaten the past 4 quarters. Their sales are supposed to be up 9%. Their earnings are supposed to be up 12.2%. And the analysts have revised their earnings estimates slightly higher. So Adobe looks pretty good. The surprises are small, but they're consistent. Now, this stock is not strong enough for me to recommend it because 12% earnings growth doesn't get me excited. But it's maintaining its monopoly. It should surprise, and it is a bellwether stock.
Now for Oracle, does the cloud transformation finally show in the numbers?
I hope so. Oracle surged when it gave upbeat guidance, and then it's been giving it back. And so we really need some evidence that guidance they provided last quarter is coming to fruition. Just the analysts are expecting their sales to be up 15.2%. Earnings supposed to be up 11.3. The analysts have revised their estimates higher, so hopefully it surprises. It's only surprised once in the past 4 quarters, so I just think Oracle has to be more upbeat with its guidance, and then everything will be fine. But yeah, the stock has, after it gapped up, the short sellers try to pick on it. So hopefully it will be fine. We should also mention, you're at our house in Florida, and that's Larry Ellison is our neighbor down the street, so he's the chairman of Oracle. So I want them to do well because I want to compliment Larry if I run into him. Okay.
Now, with AI demand exploding, is there another beat coming for Broadcom?
Yeah, they have a good earnings surprise history, so I expect them to beat. Just so everybody knows, analysts are forecasting that their sales will be up 24%. Earnings are forecasted to rise 31.7%, steady with their estimates. I don't really have any criticism of Broadcom, except their earnings surprises are very tiny, but they're good. They're consistent. So I personally would like them to surprise a little bit more, maybe give some better guidance. But this is a very solid and relatively safe stock.
Last but not least, Costco. Are we going to get another classic Costco beat?
Yeah, we should. For disclosure, Costco is our holding in our managed accounts. Your mom owns it personally. A lot of it, by the way. They had a huge beat in the previous quarter. Here's what the analysts were expecting sales to be up 8%. They were actually up 8.1%. Same store sales were up 6.9%. That's excellent. Earnings are supposed to be up 5.9%. They'll probably beat. There have been no change in analyst estimates. And Costco is one of these stocks where the earnings surprises are minor, okay? Here's the deal. Costco, actually fell in our quantitative ranking. But I held on to it because the fundamentals are so good. And that happened with me with Lilly. You got weak quantitatively, but fundamentally looked good. And I stuck with Lilly, and I got rewarded for it because it's looking a lot better now. So I'm expecting the same thing from Costco. The issue with Costco is, first of all, they're a major gasoline retailer. Have a lot more of their own brands now, the Kirkland brands. I mean, they have Kirkland golf balls, Kirkland golf clubs. I think they have Kirkland olive oil, Kirkland wine. If anything you want, as long as it says Kirkland on it now. And but consumers will spend when it's priced right. And one of the new things that's happening is TVs are getting cheaper because there's this company called TCL in China that built the world's biggest factory for micro LED TVs, which are really high-end TVs. The high-end Sonys are micro LED. And you can buy 98 TV at Costco for $1,600 at Best Buy because they price match. It's 98 inches. It's huge. It's heavy. And they've got other great buys there too, OLED TVs and things like that. So, Costco generates traffic, and I personally like Costco because it's catering to more affluent, wealthy people, what we call the K-shaped recovery, more boomers. So I'm expecting good things from them, but we'll find out. And but so far so good because they pre-announced sales and same-store sales, and they were better than expected.
Now let's move on to some subscriber questions. Can you talk about Royal Caribbean?
Now, I own that stock. I'm on a cruise ship now. I'm on a Forbes cruise. I'm actually in the cruise ship library. We're parked. But Royal Caribbean sales are supposed to be up 13.7%. Their earnings are forecasted to go up 70.9%. Big earnings surprise. Analysts have trimmed estimates slightly, but it has a very good earnings surprise history. So, it's a solid hold. Not every stock has 70.9% forecast earnings growth. So that's why I don't sell stocks even if they burp a little. And Royal Caribbean's a core holding of mine.
Can you compare PSTG to SMCI?
Is similar because it missed in this recent quarter as did SMCI. But then SMCI guided higher. So here's where we are with Pure Storage, PSTG. Their sales are supposed to be up 17.3%. Their earnings are supposed to be up 43.5%. 5. The analysts have revised their earnings estimates slightly higher. So it looks pretty good, except they missed last quarter. But before that, they've had 3 beats in a row. So Pure Storage is doing good. SMCI doesn't look that strong as far as earnings growth is, but their sales growth is spectacular. So the deal with SMCI is the 5-year order back, and customers trying to upgrade to the Blackwell chips, and of course next year we'll have a new chip in the second half of 2026. SMCI is one of Nvidia's biggest customers, so I'm sticking with it, and because we're up 700%, we don't want to pay the capital gains. So we're going to stick it out with SMCI, but Pure Storage is on the radar and it's up and coming and would be in our portfolios had they not missed last quarter. But I have hope for them.
You were bullish on PSIX recently. What happened to that stock?
It's just a small cap that got hit with profit taking in the data center correction. Their sales are supposed to be up 11.4%. The analyst community has revised their estimates higher. Last quarter, it had a 22.5% surprise. So I'm expecting great things from PSIX. It is a funny stock. It likes to sit. It likes to.
And lastly, housing feels frozen with high prices, high rates, builders discounting. Does that push the Fed toward more cuts?
Yeah, the Fed has to probably cut at least 3 times. They have to go from restrictive, which they are now, to neutral. And I think it's going to take 3 cuts. So, there's no reason for them to be restrictive on the economy. We need the job growth. We don't have the inflation out there. We are going to have 5% GDP growth next year without a lot of inflation. So the Fed might as well just join the party and help facilitate this incredible rally. And that's going to be the big difference between Kevin Hassard and Jerome.
Well, thank you so much for answering all my questions. And thank you to you all for asking such amazing questions. Dad, enjoy the cruise. Thank you all so much for watching. Please give this a like and subscribe if you haven't already. And we will see you all next week for a new video.